you've been through, I guess back towards like the investing side, you've been through multiple stock market crashes. I guess, what was it, Black Monday?
Black Monday.
Black Monday, .com, housing crisis, COVID. Was there any advice to young investors about how to go throughout that?
Yeah, I'll give you a couple things of advice. The first is, a friend of mine told me once, he goes, buy things that when you drop them, they hurt your foot. Okay. So buy things that are really intangible.
Mm-hmm.
It's like Bitcoin now. That shit can go to zero overnight.
Mm-hmm.
There's nothing behind it, right? So the key, so what you want to do is when you're looking at your own wealth, I hate to say it, you want to buy a low-cost index fund, and like an ETF for the S&P 500, and forget you own it, and put in $100 every month or however much, and then forget it.
Yeah.
Because over time, life does get incrementally better. I mean, you have valleys. We have one right now. DC is a big valley, right?
Mm-hmm.
But eventually, things recover, and then you just want to participate in that. So don't So if you want to try a flyer on some stupid thing like Bitcoin or some stock, that's okay. But the core should be in a little index fund. Put it away, add to it, and then you have the fun stuff on the side. But that's going to slowly grow and grow and grow and grow, and that's where you're going to get it. So it's okay to do the fun stuff, but do the boring stuff too, because the boring stuff keeps you at the game.
Yeah, just set it and forget it.
Exactly.
Yeah,
and always add to it, no matter what the market does. Just add to it, and then before you know it, you got a lot of money.
Yeah, just don't think about it, because I know the instinct is to sell as soon as you see.
Yeah. So historically, when you guys are selling, I'm buying. When you guys are buying, I'm selling.
Really? Okay.
We actually track retail activity a lot.
Really? Okay.
Oh yeah.
And
right now we've been selling up for the past 3 weeks.
Are retail investors usually wrong most of the time?
They're always wrong.
Always wrong?
Yeah, they're always wrong. Because we have unlimited power. We have unlimited computing power. We have informational networks with everything at our disposal. And you're going to compete against us when you look at something on a part-time basis off of Wall Street Bets or Reddit.
Yeah.
We have computers that read that shit and tell us what you guys are going to do.
Really?
Oh, yeah.
Yeah. Okay. It's so advanced now.
We have large language models. We have algorithms that just read this shit all day long.
Yeah. Yep.
We have, when a company announces their earnings, we have programs that read the CEO's facial expressions and the tone in his voice versus prior.
There's a lot of things that go into it. I know I've heard, just some
you can't
crazy
beat that shit.
Yeah, you can.
Which is why you just buy it, hold it, buy the S&P and forget it.
Just don't try to
make money, George.
Yeah.
Because we're the guys that are killing it.
Yeah, because that's Jim Simmons. He's the Renaissance. Like that fund is the the ultimate. Oh, that work.
Excuse me, ladies. Hello. Sorry about that. Some strippers came in. I had to send them away.
That's when it comes on.
He'll be available later. Okay. So I don't know if you know the story. So he's the most successful hedge fund ever. Started a hedge fund called Medallion, which is part of the Renaissance. You know his claim to fame is? He was the lead code breaker in World War II. He broke the Nazi code. So what he does is he has 150 PhDs that work for him. Now, one is a PhD in finance. Chaos theory, pattern recognition stuff. So what his theory is that the market is very random, but in that noise, because code breaking is like detecting a pattern in noise. Wall Street is depicting a pattern in noise. He's the most successful hedge fund by far in the history of humanity. I think he's compounded at like 38% a year for the past 30 years. I mean, due to mathematics, it's absurd, right?
Yeah. I was gonna say, is that?
That's the guy you're competing against. Yeah. The retail investor for 2 hours a day.
Yeah, that's kind of because I've read up on him and just like the tactics and like no finance people, which I guess makes sense
because they're biased. If your PhD is in chaos theory or particle physics, you know what you're looking at.
Yeah.
That's the difference. It's pretty impressive. The guy's unlike any other person I met.
Mm-hmm.
Very antisocial guy. You don't have a PhD in non-finance. He won't even talk to you.
Mm-hmm.
Like, okay.
Really?
All right. Smokes like 2 packs of cigarettes a day.
I heard about that. Yeah.
He's a legend.
That's the guy that every, I guess, hedge fund looks up.
Yeah, because, well, and he still continues to beat everybody. Because, so if you want to get rid of guys like that, you have to do one thing and one thing only. The stock exchange, which trades in decimals, needs to go back to fractions. You didn't know that. Stock exchange used to trade in fractions.
No, I did not know that.
Yeah, the lowest denominator was 1/8, which is 12.5 basis points. Okay. So these guys are very rapid traders. Okay. When your spread is 1/8, very hard, if not impossible, to make money. When they got rid of fractions, it went from 11 basis points, 10, now you're doing 1 basis point. So you should have a lot of day trading.
Yeah.
Okay. But when your minimum denominator is 1/8, day trading doesn't work.
Really? Okay.
You don't have to regulate. Just go back to that one thing, wipes out all these traders. That's simple.
When did that switch? Was that?
It was called the Big Bang.
Okay.
It was the Big Bang. It was in 89. 89.
So that was right after.
Changed everything. And now they're going to 24-hour trading.
Mm-hmm.
What was it? In 87, when I was trading, when the market crashed, the only way you could tell was it was a ticker tape. You probably seen it, right? In the background?
Yeah.
That was 3.5 hours behind.
Oh, okay. So
that's okay. A huge day was 80 million shares in a day. Now we do well over 1.5 billion.
Really? So it's just completely different. Information moves so much different now.
It was easy to. I mean, it's brutal right now. Brutal.
Yeah.
I mean, when I started on the trading desk, this is the guys on the desk with me. Vinny, Petey, Bobby, Louie. Nobody went to college. Okay, they all went to lunch and got drunk. The whole thing, right? And then what you started to see was as the markets became more efficient, fractions went by the way decimals. Vinny and Petey got replaced by two guys with quant degrees and computers that didn't go out to lunch. And I thought to myself, this is the beginning of the end of the fun time. And with that changed everything. Yeah. And those guys are gone, and the computer guys dominated now.
Just all quants running,
running
Wall Street.
Yep, all quants. 90% of all trading on the stock exchange is quant driven. 90%. 90.
What's your opinion on Warren Buffett's investment strategies? Do you feel like, I mean, because I feel like he follows the same thing as like you can drop it on your foot for the most part.
Yeah, exactly.
So just
what does he own? He owns railroads, power transmission companies, insurance. I mean, real intangible stuff. He hates Bitcoin as well, right?
Yeah.
Right. But what he does is he buys and he holds. His investment is like 10, 20 years, if not longer. Okay. So I'll give you the difference between a hedge fund person and a retail person. Okay. You buy a stock at 10. Stock goes to 12. You guys are taking profit. Okay. The stock goes to 12, we buy more.
Okay.
Goes to 14, we buy even more.
Okay.
16, we buy the most we can. Okay. Because the market's telling us we're right. Now, let's assume the stock goes to, you buy it at 10, it goes to 8. What do you guys do? Nothing. Like, oh, I can't sell now, I'll lose. We're out.
Yeah.
Without thinking, out. You can't personalize your losses. Okay, made a mistake, I'm out. Okay. The worst thing that you guys can do is to buy more of it.
Yeah, when it drops.
Averaging down is a recipe for bankruptcy. Because the market's saying, you're wrong, and I'm going to add to something that's wrong. You add to something that's right. So buying when something goes up is really hard, as opposed to taking money off the table. If you can remember that, then you're better than 99% of all the investors in the world.